All right, everybody, welcome back to We Talk Money. This is the end of 2025. At least for us, it is for the show. This is the last show of the year as we start to wrap it up and go into the holiday season. So in this episode, we're going to do a recap of this year, talk about everything that's happened, what we've seen, what we did right, what we did wrong, and kind of look forward to 2026 and see where we can pinpoint some opportunity and talk about what our game plan is. So yeah, guys, how y'all doing?
Fantastic.
Trav,
you got more hair on your face.
Yeah, man, growing the mountain man beard, it looks like.
Hey, going
Love it.
Going full old dad mode. I'm just send me my New Balance shoes. I'm ready,
Hey, those are hot now. The dad shoe is in. You don't know
That's
that?
right. Mom jeans and dad shoes. Yep. Everything
That's
that was
right.
cool comes around, or everything that's not cool comes back around apparently.
Yes.
Got Nikki in her new office, looking good.
Yeah,
Yep,
we need some
yep.
we need some art back there, but we know that's coming, so
We'll get
Yep.
there. We'll get there, guys. But
Mhm.
yes, sorry for the silence, but I've been working on a new home for giving you guys content.
yeah.
Cool, man. Well, let's jump into it. So, we've got a lot of volatility over the past couple of weeks since the last show. Some kind of viral topics that we want to cover. Where should we start? Let's take a look at the charts, probably.
Yeah, let's start with price action.
Yeah.
Because a lot of people, I guess since our last show, which I couldn't even tell you when that was, but since our last show, markets have kind of taken a surprising turn higher, back to all-time highs. And I think that surprised a lot of people. The S&P price action was kind of leading people to believe that we were going to head into a deeper correction, maybe 10% correction. And psych,
Yep.
back
Yeah, it
to
was-
all-time highs.
Stocks broke into bullish price structure here in mid-May and then have been just trending really, really strongly. And then here in late November, we had a pullback for the first time to tag the 100-period moving average. And you would have thought, just based on like market sentiment, at least how I was seeing it, you would have thought that we were in a full-on depression based on how people were reacting. Now, I get it. Like in the crypto world, Bitcoin is about 30 to 35% off of the prior all-time high. Right now, it's a little bit shy of 30%. We'll obviously talk about this, but this was actually one of my most profitable years for Bitcoin because even though we're off of the all-time high right now, this year we actually made it to our long-term profit target up here at 120K. This is the target that we had set back in the start of the bull market back in early 2023. So it was a phenomenal year. And I know right now a lot of crypto traders and investors aren't feeling so hot because crypto's taken a pretty deep pullback, especially in shitcoin world. But yeah, I mean, overall, if you've been in Bitcoin over the past at least couple of years, you've probably done pretty well this year.
Yeah, and there's also been so many positive regulatory catalysts this year. It's and maybe that's partly why we're having a little bit of a hangover here in crypto. It's like there was just so much positive news flow there for the first like 6-9 months of the year that it was like all of a sudden when that positive news flow started to slow down a little bit and price action started to slow down, it was like, oh, all right. Everybody sort of was like, is this the bear market now? Are we about to roll over? I just think for me personally, I think it's probably just like a healthy consolidation or a healthy correction, but at least in the majors like Bitcoin and some of the stuff I've been looking at. But I do think like it's worth mentioning and reminding everyone of just how good of a year it was for crypto in terms of actual fundamental catalysts.
Yeah. Yeah. A lot of developments, a lot of volatility, which obviously is great for traders. And right now, Bitcoin is very, very close to flat on the year. So at one point, we were up significantly from the yearly open. We were up about 40%. And then this last pullback has actually brought us into like kind of red territory. I did a little poll on Twitter the other day, and over 50% of people still think, as of last week, I think they still think that we're going to close green on the year. So we'll see if the masses are correct. But yeah, interesting to see kind of flat.
There's two reasons I want us to close red. Number one, maybe another opportunity for buying dips that we love, But number two is like, that'll invalidate this stupid, simple 4-year cycle thesis that people have had that they've been holding on to for too long.
The more obvious something becomes on the charts, the more likely it is to fail, right? That's why, after you have like 4, 5, 6 touches of a trend line, the probabilities of that trend line breaking go up significantly. And when you get the mass majority of market participants all thinking the same thing or in agreement with each other, that's when I start to get a little skeptical and say, okay, what could cause this to fail, or what could cause this to change? And yeah, I agree with you. It would be interesting to see like a red close on 2025, and then maybe even like a green 2026 to just completely invalidate this whole 4-year thing.
Absolutely.
So
I think that the OGs don't really feel this as much, right? Because I think I posted a tweet on this and showed the drawdown historically versus what we're seeing right now in Bitcoin. And I was like, can Bitcoin just have a correction in peace? Like it had to be turned into this. It had to be some crisis, something major. It's like, this is an asset that has outperformed for a very long time. I know this has been a rough year, but this is what risk assets do. And this actual drawdown is nothing in comparison to what we've seen historically. So I feel like the OGs are pretty okay right now. It's the new people, the new entrants into Bitcoin this year, crypto in general, that are probably feeling this because they just don't know how it goes or how to judge the volatility, essentially.
But interestingly, a lot of the ETFs have seen net inflows. In particular, like I know Fidelity's and a few of the other big ones were actually offsetting some outflows out of IBIT, which is the largest ETF right now for Bitcoin. But I think there were still net inflows through much of the recent correction. And a lot of that was because there were a bunch of ETFs picking up some of that slack, which I thought was interesting. It kind of tells me that there's still accumulation going on for portfolios, probably by financial advisors and people that are still needing to get off zero as far as an allocation is concerned.
Can confirm that on the financial advisor side, a lot of those inflows are probably coming from institutions and advisors, people going to their advisors and saying, okay, we have access now, I want in. So I do agree with that.
Yep. It is funny though. Another dynamic that I've noticed is that, and you mentioned it a little bit here a minute ago, but that the dynamic where the tombstone comes out every time Bitcoin has like even a minor correction now, the people that come out of the woodwork to say, this is it. This is finally the time. Bitcoin's going to die now. And like, all these narratives and, the DATs are toast. Michael Saylor's toast. Strategy's going to get liquidated. They're going to get margin called as if they're some like day trader, just think these just god awful takes that get out there. Anytime Bitcoin has even just the smallest underperformance or correction, it's kind of wild to see.
Yeah. And Trav, I really liked your MicroStrategy video. For anybody that doesn't know, thanks. Trav did a deep dive on basically what everybody's missing about MicroStrategy. TD, maybe for the pod today, what is the summary or the TLDR of that?
The TLDR is basically that, strategy has got a lot of levers to continue to basically persist for years and years and years. And they made some interesting moves recently that allow them to give them cushions for at least like, the next 4 or 5 years to continue to just basically survive. Even if Bitcoin were to go down to, 10,000, it's not a situation where a strategy gets liquidated. There's nothing in like their debt documents or anything like that forces them to sell all their Bitcoin. They don't have to sell Bitcoin when the stock trades below NAV. So basically it was just dispelling a lot of these just crazy ideas that strategy is on the verge of bankruptcy.
Yeah, it's really good to see because, rage porn is all the rage on Twitter, right? It's like the more insane and fear-based the narrative, the more viral it goes. And liked how you snapshotted a lot of those and called a lot of the BS out.
I got to put some of those people on blast, man. Some of those people that have 1 million plus followers across their socials, like, come on, y'all got to do better. Do some basic homework,
Yeah.
You did it very tactfully, Trav.
Okay,
it was
good.
a fantastic video. Well done.
Should I do one
masterclass?
Should I do one not as tactfully someday?
Yes.
Yes, absolutely,
Yes.
bro. Let's
It's
rip into
okay.
these
No, I
Frauds.
mean,
Do
I
I need
don't
to
know. I'm
put
not
people on
one to
blast?
talk. I'm not one to talk because I talk all kinds of crap on my channel when people are putting out dumb stuff. But
Dave Ramsey loves you, you know?
oh god, I've
And
definitely
Kiyosaki.
Kiyosaki,
definitely
yeah.
shit on him a few times. But
They deserve it, you know? They deserve it. They can
Yep.
handle it too. They're fine.
All right. So what else has happened this year? So I think another big narrative is gold and silver have been kicking butt,
Yeah.
which is actually pretty interesting to see. I mean, this was I would say the most pretty chart that I've seen over the past couple of years, like the big cup and handle. I mean, we've been talking about this for many, many, many years. And finally, over the last 24 months or so, once we broke out above 2K, we've just been in an extremely strong run. And to me, gold has gotten parabolic and probably overbought here. If we look at the daily, we know we had a parabolic run to like 4,400 back in October, but price action is still holding up. I mean, you got higher highs, higher lows. And then on silver recently, I mean, this is up a double in like 6 months. But for anybody watching the video, anytime silver has gone parabolic, even looking back to like the 1970s, the next year is usually a red year. So I helped some families sell some of their silver bullion this week, actually. I was like, look, if you would rather have the cash and rather flip it into something else, I think this is a great time to sell silver. Obviously not financial advice for you guys listening to the pod, but we just know how silver trades. And with gold and silver so extremely parabolic right now, I don't know. I'm calling for a red year in 2026 for the metals. What do you guys think?
I think to your point, Chris, helping people, sell it, or your family member, especially if you're older and you could use the cash for other things, now could be a really good time if you are in retirement. Because how long did it take silver to make a new high? It trades slow. Once it collapses and actually corrects, it can take decades to get back to a new all-time high, right? So, what was that?
The pivot high was in 2011, basically 2011. And we didn't break that all-time high until this year. So it went parabolic for 2 years, call it 3 years, and then collapsed like a very large percentage. It was down, about 75%. And it took well over a decade to recoup that. So that, and this is very typical of like just commodities in general. If it's metals or lumber or even cattle prices right now are like super high, when prices go up, that increases the incentive to increase the supply, which you can do. You can turn on miners, you can turn on production of different commodities. And that's why when prices go parabolic, they typically pull back so hard.
Yeah. So to that point, you have to look at your entire picture here. This could be a good time to sell the metals, depending on where you're at in life and those long cycles.
Yeah, I've thought about selling mine or like hedging with, some kind of derivative, but I don't know. I don't need to sell them. They're a hedge. It's grown to a larger percentage of my portfolio, but my Bitcoin holdings still dwarf my metal holdings. So I'm like, I'm just going to keep it.
And you have decades to be invested, and that's a bit of a different case. So,
yeah.
Yeah.
Trav, did you take any profit on that gold short?
So I flipped the trade from, I basically bought some puts right near that first top a couple of months ago, and they were up nicely. And then I actually turned it into a spread. Mm-hmm. And so when that recovery happened, it basically ended up at break even essentially on that trade. So while I was like in profit at one point, I didn't end up losing all the capital from the trade I put into the puts because I turned it into a spread. So I took in a bunch of puts that I'd sold lower. I took in income from those that offset the losses that I had when gold bounced. So it was a trade that was working, and then I kind of changed the trade, and then it went against me. But overall, it ended up being like a net nothing. So,
gotcha.
Yeah.
Yeah, the timing was really good. I mean, I think you got pretty close to the parabolic top here. And then it's like, you just don't control if it's actually going to pull back much deeper. And I think that's a really good lesson in risk management. It's like shorting against parabolic rips is dangerous enough, but like doing what you did with being able to turn it into a spread, that's just a really smart way in case it doesn't go in your favor. So
Yep, exactly right. And had it kept going down, I would have had some additional profit, and then I would have been capped out on the spread. But the nice thing about putting it on as a spread or turning it into a spread was that I took out my initial cost basis. So when gold did rally, like I said, instead of being down 100%, I was basically back to flat. So it sucked to give up profit, but it was, I think, ultimately managing that trade from a risk perspective wasn't the worst way that I've ever managed it. In hindsight, obviously, with perfect hindsight, you'd say, well, you should have just sold your puts right before it rallied. But it's like, well, yeah, duh. If I was perfect and knew the future, I'd be a lot richer, you know?
Yep.
So what stops gold from here? I mean, what stops this train? this gold train?
Well, the thing that I've been thinking about that I just don't know is like, China, Russia, whoever that's actually buying gold. Like, are they going to just continue to buy, and is that going to hold it up, or is this mostly driven by retail? I think in one of our last shows, I showed the video or the images of the lines down the road with people rushing to buy, gold at these highs. So yeah, I don't know. I'm just looking at the chart and not really thinking too much about like the capital flow of like what's happening behind the scenes. But you guys have any insights on that?
I think one thing that might be able to slow it down is if you had a little bit of calm return to bond markets. Like right now, I think there's some freaking out about what's happening with Japanese bond yields and US yields, again, kind of rising recently a little bit. And so, I think some of those pressures in the government bond markets are certainly probably contributing a little bit to people's desire to want to own gold and buy more gold. But if you had like some relative calm, if you had like volatility die down and maybe even yields, particularly in Japan, start to like cool off again, then you might see maybe you see the price action in gold slow down quite a bit. But on the other hand, you can make the argument still that similar to Bitcoin, the debasement trade, it's hard to see where that ends, like on a longer term basis. And so, yeah, while the price action's probably a little too overheated on gold, it's like, do you want to call the end to gold's like multi-year rally here? That's a tough call to make given the backdrop of what we know.
Here's my call, and I don't have a dog in this fight as far as a trade on yet. I'm calling for a parabolic rip, another one in January, and then a hard reversal, and then gold closes red on 2026. So we'll have to pull the tape later this time next year to see if I was right or wrong, but that's my call.
Will you attempt to short or buy puts for if you are seeing a parabolic move?
Yeah, like
Okay.
let me pull up this chart. So, this was parabolic, and then gold hit 4,400 and then basically reversed down to like 3,900, and then you can tell this is kind of turning into like a little bit of a bull flag, kind of just you could call it a wedge or an acceleration. So like if we get it, basically today we're testing gold's all-time high. If we get another like Fibonacci extension here, and like let's say we rip to 5,000 or above 5,000, yeah, I'm gonna look to kind of take a stab at a pretty decent short there.
Nice, I like it.
So we'll see. It depends on how we get there. If it's like a slow trend and it's just grinding higher, probably not. But if we get like a parabolic rip and we see the lines forming at the gold shops again, like, yeah, I'll do that.
Nice, I like that.
Let's talk about international stuff. I know you guys have been looking at this, and a lot of people in the US, we definitely have home country bias, right? But like some of the European and Asian and just, I guess, emerging market indices are up quite a bit. Like the FTSE up, 25% or more, the DAX 20%, Japan, what's Japan up this year? Like 27. And then if we look at some of the international indices, like what do you guys like to look at? Like EFA. So EFA is
it's the MSCI international
30%. Yeah.
It's
There's a whole bunch of them. How are you guys looking at this?
Yeah, I mean, I think almost any way you look at it, you can clearly see that international markets finally are having a great year. And yeah, MSCI, the big one, that's up quite a bit, up 30% year to date. But, if you look underneath the hood, there's stuff like EFV, like the value, international value, depending on the index or depending on the ETF, is up 40 to 50% this year. So yeah, not what you might have expected in a year where themes like AI and US tech were so hot, right? But yeah, international is quietly starting to like really chug. And I think there's a couple factors behind that. One is that certainly with Trump, the administration, unveiling the tariffs in April or in March and April, and basically causing, the dollar to fall, or at least contributing to the dollar to fall, like international investors that were invested so heavily in the U.S. probably look to deploy some capital outside. Then you also have governments in the EU committing to spending more money on defense and basically committing to more fiscal spending. So you've got some fiscal impulse there behind it as well, helping, potentially revive some of these economies out there. Certainly in Asia, you've got lots of like economic activity. Japan's got some interesting things happening on the political front and the monetary front. And so, yeah, I think just a lot of those factors are all sort of coalescing this year. And I think this could also be a 2026 theme for sure. Like momentum starts to get behind some of these trades and some of these allocations that are too low. You can add a lot more passive flows to this trend next year. So I think this is something that we could continue to see, especially if we continue to see pressure on USD next year.
Nick, anything to add to that?
I will say from the retail side, because you guys know I pay attention to the consumer and retail stocks, I've noticed Asia pick up big time. You look at names like Levi, you look at names like Lululemon, and you notice that China's strong and Asia's kind of in a comeback. Europe is holding up as well. So people are getting back out there and spending money again in the economy internationally. So I think that's kind of what we're seeing here is a rebound. Finally, I think they were slow to rebound, but like Lululemon's China number, their revenue growth was over 40%.
Oh, wow.
So clearly they're seeing some good stuff coming out of international markets, or at least our U.S. companies are.
Glad you mentioned China, yeah, because there are also, stimulus efforts there to try to help the consumer that were kicked off like or even earlier in 2025, and so that's another big Asia market like that you said that could be, I think a lot of Chinese stocks could still have a lot further to run. I may need to take my third trade on Alibaba here soon. We had two really nice winning call option trades on Baba this year. So maybe I'll get set up for a third one here shortly.
Yeah, man, you nailed this squeeze. Was it in the late summer? Was that when you were taking that?
I also had it at the beginning of the year. So the January move and the call it the August September move on Baba. Basically that's been actually one of the biggest contributors to the 100K portfolio profits this year, believe it or not.
Oh, wow. Nice. Yeah, just taking a look at performance, I guess comparing all the big assets that we've talked about so far, like gold, obviously number one, we're currently sitting at about over 60% on the year. And then, EFA with international is up over 30. And then NASDAQ, which has been kind of our guiding light, I guess it's the, we refer to it as the fire marshal, like, can the party continue on? And I look to the NASDAQ at that. It's up nicely. 20%. That's nothing to shake a stick at.
No.
And then a large cap with the S&P up around 16%. And then you got Bitcoin, which is actually down, 3, 4, 5%, depending on what hour you look at the chart on the year, which is just, it's really wild because, we've mentioned this already, but, one, we hit the big profit target of 120, right? That was the big measured area. And then we've had a deep 30% correction. So at one point, we were up, over 30% on the year. So,
again,
it's an interesting year.
Diversification really worked this year for people. If you were 100% in crypto, which I know a lot of people that are, and you didn't own any stocks, it didn't feel so great. So yep. I don't know. I know that we talk about this a lot and we beat it, a lot, but it really is an important concept. Diversification is not dead. And I think that there's been a quote unquote war on diversification over the past year or two because US equities have been amazing. And that's kind of been where everyone's focus has been. But, you look at what's going on this year, and it's just a great case for staying in tune with other parts of the market and not getting too much tunnel vision, so to speak, when it comes to your assets.
Well said.
I was actually looking the other day at S&P 500 data going back to like 1970, and there's only one sequence of more than 3 straight years of like double-digit returns. So that was in 95 through 2000. But other than that, typically when you get 3 years of, and again, this is kind of simplistic, right? Like we talked about the Bitcoin 4-year cycle being too simplistic, but it just statistically, I just think it's interesting that the S&P typically, if it has 3 like really strong years, basically it's going to tend to be followed by a weaker year. But again, there is a period in the sample where you had 5 straight years, from 95 to 1999, of more than 21% every single year for 5 straight years. So I don't know, maybe we're in that environment, but
Yeah.
it does start to give you a little caution after like 3 really, really good years in the S&P and the NASDAQ.
And I think that speaks, it's a good time to talk about that, actually, bracing yourself, so to speak. A lot of people, especially early, I work with a lot of early retirees. They've made a lot of money in crypto or equities or, IPOs, and they're retiring in their 30s. It's phenomenal. But I think a lot of people are just almost too used to what we've been experiencing over the past decade, really. And I think that people need to start positioning and preparing for potentially future weakness or a lost decade, or, these things can happen. And when you just have nothing but double-digit returns, it can get hard. It's easy to forget that. But I urge early retirees, I come across a lot of them in their 30s and 40s, to not forget that that's a possible scenario. And it could completely blow up your entire plan of retiring early, and living off of your $250,000 a year, or whatever it is you're trying to live off of, depending on your portfolio. So I just think stress test your plan, and don't forget that these lost decades can happen, returns can shift, and diversification, I think, will continue to be very important.
Yeah. I mean, we talk about this a lot, and it can sound boring, right? Oh, diversify, but that literally is the damn armor that can save you. Like, concentration, we talk about this a lot. Concentration is ammo, right? It's the way you super juice returns if you're right. And diversification is the way you protect yourself. It's the ammo to where you're not going to die if Bitcoin collapses, or if, we have a really bad decade in stock indices, right? So yeah, I mean, I love that idea. And, I think it's just really smart. Anything else people can do to kind of protect against a lost decade, or, what else other than just diversifying can people do?
Well, I think it's really important to think about what age you're trying to retire and how long that portfolio value needs to work for you and last. So what I would say is, if you are planning on retiring in your 30s and 40s, your account balance is going to matter. Like, stress test flat returns, stress test a lost decade. And if you can still pull out the money you need to live off of, and in those scenarios, and you're okay, great. You've developed a big enough, asset base to where you can live off it even through tough times. But I think what I'm noticing with some scenarios is that asset base is big enough to sustain their early retirement if everything goes perfectly. If we get that, consistent 10% return a year annualized, if all of that works out the way it has historically for them, then they're going to be okay. But we know markets aren't perfect, and we know things can shift and change in ways that we can't, if you retire during the the 2008 financial crisis, you were blindsided. Your portfolio went down 50%. That's sequence of return risk is real, and it's going to change how your retirement is going to look and your ability to do so. So my advice is stress test flat returns, stress test a lost decade. And if your asset base isn't quite there to sustain you through those hard, times, then you may want to work a few more years, save a little bit more money, maybe work to get an extra X amount in there, and then stress test it again and see if that gets you through. So the earlier you're retiring, the more important that's going to be for you to do, I think. So that asset base really matters.
And I know not everybody wants to be like an active trader, but there are things you can do to juice returns in bear markets or flat markets if you're active. And that's where the skill development of like actually learning how to trade. And I think a lot of people, even if they're long-term investors, they're still applying the skill of trading. And so why not learn how to short or hedge or trade volatility, right? If the S&P is and Bitcoin, let's say, are flat to down 1 year, there are strategies that you can use to actually have a net gain on your net worth in a bear market. So not everybody wants to do that, but those options exist.
There's also strategy around guardrails, and simply in down years, don't withdraw as much. Know what your wiggle room is. And in great years, take out a little more, go on that vacation. In down years, pull back on your withdrawal. The thing that'll kill you is having that big withdrawal rate or high withdrawal rate during that lost decade or hard time.
Kind of the opposite side of the escape velocity wealth curve, we talk a lot about this stuff, right? Is people that are feeling like they're in poverty and they're making good money. And this is an article that kind of went viral. Part 1, my life is a lie. And do you guys want to just give a synopsis of what this article was talking about and maybe kick around the idea of like, what is poverty really?
Yeah, it was a very thought-provoking article, and there are a couple of follow-up parts too that he's written. But basically, the first article lays out the idea that the way that we define poverty is really not right anymore, and basically anything below. So he basically made the case that what we consider poverty is like far too low than where it should be today. Like the line for people who are struggling is actually much higher. And that's one, because of the way that like statistics are calculated around the poverty line. He just says that it's flat out wrong the way that they're calculating it, but that basically they're using an outdated metric for how the federal government, for instance, is calculating the poverty line. But the real broader point basically is that the reason a lot of families feel like they're struggling, even if they're making, over $100K per year as a household, is because he's saying, all of these things within the budget have gone up so tremendously, have inflated so tremendously in price, and incomes haven't really kept up, that even though the quality of life is also higher, it doesn't change the fact that the overall numbers, the overall spending that families are having to make on key things like healthcare, education, housing have gone up so much that it's squeezing everybody, even in the middle class especially. There's a great point in there about basically that anyone who's super low income basically gets all this help from the federal government and all these subsidies and the SNAP programs and free groceries and all this stuff. And anyone who's like at a very high net worth obviously is doing great because of asset prices going up, stock markets, real estate, et cetera. And so they're fine. But everybody else in the middle is getting so squeezed because they're not getting the federal benefits or much of the federal help, but they're not benefiting as much like the rich are from asset prices going up. So there's just a tremendous amount of pressure on families in the middle class. And the middle is kind of just getting squeezed from all sides. And so, but you really interesting points around the numbers. He basically said that like 140,000 should be like considered the new poverty line for a family of, I think, 4 or 5. And there was a bunch of arguments around that. And so like, even if you believe the number is actually closer to say 100,000, which is kind of what I believe to be the case, $100,000 typically is something that people might have previously thought would be like a very comfortable number for a family to be at, a small family to be at. But clearly it's not anymore because of all of the inflation that we've had in the last decade or two.
Yep. Nick, follow-ups?
Yeah, I mean, really childcare, I think, is the biggest issue, and that's the biggest squeeze. Childcare inflation is way outpaced inflation. Is still an issue, I would say, even today. We're still, up around 3%, right? We're not getting to that 2% Fed target. I feel like the Fed's going to have to move the target on that or something.
I'll give you a stat here on healthcare as a category. So our healthcare premiums are up 35% for 2026. Our family's healthcare premiums are 35% higher, and actually the deductibles and the plan benefits, it's the exact same plan, but they're actually, the plan itself is actually a little worse, and the price is up 35%. So in reality, we're actually probably looking at like a 40 or 50% increase effectively in 1 year in our healthcare insurance.
How is that legal?
It's
how
honestly
is this okay?
It's mind-blowing. I think that leads to another discussion about healthcare at some point that we'll have on one of our shows. That I think that system is broken, and I think it's going to be targeted within the next 3 to 5 years for complete overhaul in the U.S. because it's just frankly not sustainable. But yeah,
no, and that's why people are pissed off. That's why people are angry at capitalism, especially younger people. They feel like they're not able to get ahead. And I think when I first read this article, I was a little, I've traveled all over the world. I've seen I've seen poverty. So when I thought of the word poverty, initially I was like, his numbers weren't showing quote unquote poverty to me in the sense that I think about poverty, right?
Mm-hmm.
So I think that was why it was so inflammatory in the beginning, because the lifestyle he was describing at 140K was like, your needs are met, you're eating, your kids are going to daycare, you live in a probably 1,500 square foot home with 3 bedrooms, you probably drive 2 nice cars that aren't beaters, that are reliable. So I think that was my initial gut response to it when I ran those numbers and used his numbers to get to that 140K. But his follow-up was good. And really, the poverty word was just probably taken too literally by a lot of people. The main idea is exactly what you're saying, Trav, that the middle class is being squeezed. You hit a level of success to get into the middle class, and then you lose all of those benefits that, the welfare benefits, the SNAP, things like that. And that can feel very unfair to a lot of people. So I think that's the issue at hand. No subsidies for childcare once you get to a certain income level, no subsidies for healthcare once you get to a certain income level. And then you're just treading water. So really it's a story of the middle class consumer is just running in this hamster wheel, and they're just not able to save for retirement because of these broken systems with childcare and healthcare, essentially.
Yeah, it's a tough situation to be in for a lot of people, man. And that's, I think, why we do what we do, is to try to help people get out of that rat race and get into escape velocity. Like, that is the ultimate freedom when your portfolio grows faster than your lifestyle needs. Like, that is, I think, just a beautiful place to get to. And we've seen it happen with, a lot of people in the wealth building community. And we've also seen people go backwards and end up back in the rat race because of bad decisions or, just life circumstances outside of their control. And yeah, well, I think one of the big, conversations this year has been, capitalism versus socialism. And obviously we have our bias towards capitalism, but I get it. I get why, a 25-year-old guy in New York is pissed off and voting for Mandami, right? I mean, there's reasons why we get these big political swings. And when people feel helpless, I think they turn to broken things like socialism and communism to look for an answer. And that conversation, I think, is just going to heat up going into 2026. What do you guys think?
Yeah, that's another overhaul that we need, the education system. Essentially, all of these kids are coming out of college burdened by debt, and they're just never going to get out from under it. And that's why you're seeing people vote the way that they're voting, and young people coming to the voting booth more so than, prior generations. God, we were out when we were when we were 21, we were out getting drunk at the club. We were out, we weren't thinking about these things, or at least I know I wasn't. I don't know about you guys, but it seems like now it's just so much harder for them. And that's why they're speaking up, and we're going to need change. It just needs to be done the right way.
The midterms are going to be interesting in 2026. We're already seeing some evidence that after the shift to the right for the 2024 elections, that a lot of the more local elections in 2025 are shifting back to the Democratic or the left side. So it'll be interesting to see if that's confirmed in 2026 or not with the the broader midterm elections. Because we're seeing a real movement towards more socialists, more democratic socialist policies, and potentially that could have a big economic impact and a big impact on stock markets if that becomes a much bigger trend. So that's something we'll be watching very closely in the next couple of years.
Yeah. Let's talk about, what are the big black swans or things that we could be thinking about going into 2026? Obviously the election. Trav, another awesome video that you put out was about the AI bubble. Like, do you see that deflating next year, or is that something that can continue for a few more years before, I don't know, valuations need to play catch up, or revenues need to play catch up with the valuations, or what do you think?
Yeah, I think the AI theme is going to continue to be quite a hot topic and quite a big theme within the market. Right now, we're seeing it's very shaky. We've had Broadcom, Oracle, even a smaller company like Fermi was down 40% today. So Oracle, Broadcom this week were talk of the town. OpenAI, a lot of people concerned about OpenAI and all their huge commitments, given the fact that Google has come on so strong. So there's a lot of concern and worry about the AI theme and the AI potential bubble. I honestly, in my video that I laid out a couple weeks back, I don't think it's going to be a 2026 blow up. And I could be wrong. Of course, I could be wrong. But actually, when you look at, just like the sequence and the timeline and when the capacity is coming online for a lot of these AI data centers, the first initial wave of big gigawatt size data centers are actually just going to go into operation in 2026. And so we have not, even though OpenAI has $1 trillion of commitments through like 2031 or 2032, only a very, very small fraction of that is actually getting spent in 2025 and 2026. And so I think we're still actually in kind of an earlier phase. Now, it doesn't mean that the stocks are necessarily going to continue working, because we front loaded a lot of returns of the AI infrastructure stocks this year. But again, I think it's going to continue to be a very hot topic with a lot of headline volatility in 2026. But I personally do not believe that there's going to be some great crash because the AI infrastructure build out just stops. I don't see that really happening just because of the timeline on how these things get built out. So right now we're actually seeing a delay in some of these bigger data centers being brought online, like the Stargate one, the very first phase of Stargate that's being built out in Abilene with Oracle and Crusoe and OpenAI. Basically, that one is having some like delays, and so you haven't even again had like a lot of the initial capacity from some of these mega centers come online. So I think, I don't know. It's going to be a very interesting thing for it to play out, but it's interesting in the sense that valuations are lower today than they were at the peak of the dot-com boom, and I think we haven't really reached the peak like fervor that we did in most of the large caps, at least back then. So maybe this is like 97 or 98 as opposed to like 99 2000 kind of vibes. But
that's what I want to hear, man. Let's get another 2 years. Let's go ahead and just rip the faces off of some of these like breakout trades and squeeze trades, and then we'll disappear into the fog.
Yes. I think a big theme for me actually going into 2026 for as far as stock picks are concerned is that shift though from maybe being investors being so focused on the infrastructure part of AI and starting to more focus on applications and the companies that are implementing AI effectively. Basically what companies are actually taking these models and improving worker productivity or creating new products that are taking off and causing them to have significant revenue growth. So I'm really focused on here in the near term and over the next year or two, like who are going to be the winners within applications that are using AI. Because honestly, like a lot of these software developers are going to, if there is an infrastructure overbuild and oversupply, that's just going to drive costs, down for them. And so they're going to benefit from essentially having subsidized, cheaper AI compute. And so, that's definitely a big theme of mine that I've already started to build a couple of early positions around.
Love it, man. There's also a lot of like rotation plays in the market right now. So I've been more active in looking for stuff that's like really beat and making breakouts, and just trying to use a little more leverage like in options. So I think this is something that if the markets hold up next year, I'm going to keep pushing for. Like an example, I had a trade on Lyft. Now this one, it doesn't look too impressive on the chart. It was a 60-something% return. I traded it pretty well. So I bought the squeeze, had a breakout. It was a fake out, took profit, and then took profit on the bounce. But there's just stuff like this where there's like a big accumulation range. I've got a position in Zoom, in Unity, in CB. Like there's just a lot of these charts that are still holding up and either giving like short squeezes or breakouts. And so that's something that I'm going to really try to push hard for in Q1 of next year. If the markets hold up, if the dynamic shift or something, I'll adjust that. But every day I'm just scanning and thinking and looking for, what is the sector that could have the biggest squeezes, and then which charts support that thesis. And obviously you guys are really good at the deep dives on the fundamentals and finding those diamonds in the rough. And Trav, I think that's why you've been kicking ass so far this year, man. What's the 100K at so far going into the end of the year?
It's at about 145 today. And actually one of my larger positions is up 54% right now. So it's
Nice.
out for the day. It's up 54% for the day.
Which position is that?
It's a cannabis stock. It's yeah. So that is contributing nicely on a day where a lot of other stuff is red. But
why is weed ripping? What's the latest on the rescheduling or whatever?
The news out from CNBC and the Washington Post today is basically that Trump is going to sign an executive order in the next few days that will essentially order his attorney general to reclassify marijuana under federal law to a much less severe drug. And so that'll open up a bunch of benefits for, the dispensary operators and for the industry as a whole. And so that's a catalyst. So we've kind of been waiting for several years. We thought we were going to get it under the Biden administration. Then it looked like we'd get it earlier in the Trump administration. And now it's coming to fruition and potentially. But I built this position in a couple of these stocks in the 100K portfolio pretty recently. So over the summer, and then made some ads in the recent dip after people got disappointed that it didn't happen in August or September. And so this is a great example of a play where it's like we had conviction. There was a little bit of a correction where like people probably second guess themselves. We used that as an opportunity to accumulate more, and now it's contributing. I think this can still be up significantly in like the next 1 to 2 years. So hoping that will happen. But
check this out. So I built this marijuana watch list like probably during COVID. I can't remember the last time I updated it, but for you guys watching the video, you can see like probably a third to a half of these tickers are not even trading anymore. And the ones that are still trading are up anywhere from like 10, 20 to like 40 or 50% today on that news.
Yeah, it's exciting, man. It's exciting. I think, there's a lot we could talk about this sector, but I'm happy to see green like this on a day where the market's bloody red everywhere else. And honestly, on your picks, I'm looking at like CB green on the day for an ugly day on the market, and your strategies on the options side have been really interesting. I know I followed you into a couple of those, so.
Yeah, I haven't had many trades this year on the option side, but the ones that I have picked have actually worked well. And, I'm not like an options genius or guru like that. I still have to really think through the time decay and the way that leverage works. And, it's definitely an extra layer of complexity. But when you do it right, man, the returns are just insane. So I've been liking it. Mm-hmm.
Yeah. And a lot of those charts, Chris, I've been, talking about the bottoming breakouts, the Zooms and the Unities, a lot of these, even the Stitch fixes, Trav, like multi-year bottoms that have been forming that we've been waiting and waiting and waiting to see if we were going to get trade setups on. And we've been faked out a lot, but it seems like now tis the season for bottoming breakouts. It appears finally took a long time.
This Stitch Fix chart is nuts, man. Like look at this. I don't think I've seen an accumulation range this long. This is crazy. Is it a turnaround story or is it a dying company though? That's the question.
that's the problem that we are debating right now, right? Sure, the chart is gorgeous. If it breaks out, it could be a great setup. But at the same time, I don't love the business personally. But there are some signs that they may be able to hold up and sustain. However, we still have more to be seen from them. But you know, sometimes traders don't care about the fundamentals, and they're just looking at a really beautiful stock chart that's tested resistance a million times and is finally breaking out. And
Rivian is an example of that today, actually.
Yeah, exactly.
Yeah.
Rivian, I think, has a little bit of a high short interest. I think the short interest was, you know, on the high side, so that could help a bottoming breakout here. Stitch Fix doesn't have that short interest anymore, I don't think. But that's what I'm looking at, is bottoming breakouts with high short interest for those squeezes, so that you've got, you know, that nice tailwind behind you. A lot of the crypto miners have that going on too. They kind of have, you know, multiple tailwinds behind them, so to speak. So I feel like those are the opportunities that I'll be looking for.
Here, here. And I don't think I've talked about this on the show, but my recent trades on Bitcoin, I can't believe I haven't mentioned this yet. So I actually shorted the breakdown below 100K, scaled out, took profit on the short to raise capital for a dip buy, and then bought in the low 80s. And I'm still holding that with some leverage on futures. But right now, Bitcoin is actually getting rejected at the yearly open. We've had like so many days where it's actually using it as resistance. So I'm unclear what's going to happen here going into the weekend, but I'm trying to be patient. If we get a V bottom bounce, I'll continue to hold that. If we get another breakdown, you know, we've got some areas further deeper below the 80K. The next major range is actually in the mid 50s, which, think about like the pandemonium that would explode if Bitcoin was down around 55 or 60. But that is the next major area. So if we get another breakdown, I'm going to do the same thing. I'm going to short that and then try to buy the dip even more aggressively. And yeah, we'll have to see. I mean, we've got what, 2 or 3 weeks left in the year. And then I think the lower that we open for 2026, the better. So even though I'm long, I'm kind of rooting on another breakdown. I don't know, but that's where I'm at with it. I'm still bullishly biased as long as we're above 85 or 80. But if we break down below that, I think we could see another leg really push us down into the 50s. So we'll see if that proves right, but that's how I'm playing it.
Nice. I like that. I'd love to get some cheapies.
Nice. All right, guys. We can start to wrap it up. Anything else that I missed or that y'all want to bring up?
We'll definitely have to talk some more 2026 themes and ideas early on in January, as I've been working on my side on some kind of new themes and ideas for 26 as well. So we should we'll hit that harder at the end of at the beginning of the year.
Nice.
And don't forget end of the year tax planning, tax loss harvesting. If you've got gains, maybe harvest some losses. Wash sale rules don't apply to crypto. Get your 401k salary deferrals in. Okay, I'll shut up now. Do your Roth versus traditional analysis. Okay, sorry.
Nikki the tax nerd.
Apologies for trying.
No, it's good. People need to know about that. And you are very helpful to your clients on the tax side. I just start to go cross-eyed and fall asleep when we start talking about that. But all right, guys. Well, yeah, good kind of yearly wrap-up show. If you have any questions for the next show, feel free to throw them in the comments or reply to us on the Twitter X platform. And yeah, share this with anybody that needs to improve their skills in the markets and their wealth building plan. And we will see you guys bright and early in 2026.
Cheers.
Thanks, guys.
Cheers, everybody.
See ya.